You don't need tens of thousands of dollars to start angel investing. You could do it right now, today, for as little as $1,000. That's what I'm doing, and let me show you how. Now, before we start anything, let me remind you, I'm not a financial advisor. I'm not certified in any way. I'm just a dude on YouTube that happens to do some of this stuff with his own money. Use this for entertainment purposes and consult your own advisors. Now, with that said, let's get into how you can angel invest for as little as $1,000. So one of the biggest things with angel investing that many people think is you need tens of thousands or hundreds of thousands of dollars and connections to all these potential startup founders in order to get started. And with today's technology, that's just not true anymore. Angel investing is a very profitable method of investing, albeit also very risky. If you want to get way deeper into the weeds, check out the book Angel by Jason Calacanis. I'll link it in the description. That is in no way affiliated with me, but it is a great book and how I got started. Now, the first thing that's going to cut a lot of people off here, but you can grow into this, is in order to do this, you do have to be what's called an accredited investor. Now, that is not any sort of complex certification process that you need, but it is a set of requirements set by the SEC in order to invest in private companies. You either need to have $200,000 in annual income for the last 2 years with the expectation of the similar in the current year, $300,000 combined. Now, that's a lot. Don't get me wrong, that's a lot. Like, unless you're a software engineer or an exec or a high-paid salesperson, you're probably not gonna hit that. But this other one's a little more attainable, especially if you are in the real estate market. You need to have about $1 million, well, not about, at least $1 million in net worth, excluding your primary residence, in order to be qualified as an accredited investor. Now, this is just something you self-proclaim about yourself whenever you use any of the platforms that I'm about to mention. Now, you might not be an accredited investor yet, but still check this out. It is still worthwhile to understand this information and could be a great goal to get to when you hit that $1 million net worth goal. One thing you need to remember about angel investing is that diversification is very important. If you've watched any of my channel, you will know that I'm not the biggest fan of diversification across my portfolio, but when it comes to angel investing, you have to be, because most of the things you invest in are going to go to zero. Statistically, something like 50% of startups fail in the first year. So half of your money is gone right there, assuming you don't have a better than average investing strategy. Once you accept the fact that most of your bets are going to go to zero, that is going to change your mindset from trying to pick that one single company that's going to hit it big to placing bets on maybe 10 different companies that are going to hit it big. Now, all of them have the same upside potential, but the risk is much, much higher. You see, when you invest in something like Tesla in the stock market, the risk of that going to zero is next to nothing. They are public companies with financials out there backed by well-known, strong investor institutions. This may or may not be the case when you are angel investing. Sometimes angel investing, you are one of the first money in on these companies. And so they're not backed by massive investors. Hopefully you're investing alongside some of these investors, and I'll show you how in the next step. But you're gonna wanna place more than one bet. So while yes, you can get into it for as little as $1,000, and I did, my goal personally is to place 10 $1,000 bets this year for a total of $10,000, and then we'll make the next steps. Now, how am I doing this? I'm using a platform called AngelList, which maybe you've heard of. AngelList has the capability to join into what's called a syndicate. Syndicates are basically a group of smaller investors led by one lead investor. Now, most of these syndicates are led by experienced VC or angel investors. Jason Calacanis runs his own syndicate, albeit I don't think he uses AngelList anymore. There are tons and tons of syndicates that have different investment targets, different investment theses, different areas of expertise. Some are in biotech, some are in fintech, some are focused on Latin American tech. And you can join the syndicates that make the most sense for your investment philosophy. But the great thing about these syndicates is because they are led by these experienced lead investors that are also putting their own money in, they do much of the due diligence. So most of the deals that come across your so-called desk are actually vetted and have a much lower risk than if you were to go out and source these deals yourself. Now, what's the downside? The downside is you pay for this. You pay for that lead investor to go out and source these deals and work their connections and access their connections and vet these deals before they present it to the syndicate. Now, there's this fee called a carry on these syndicates. Typically, most of these on AngelList I'm seeing are 20% carries, which means 20% of your profits are going to go back to the lead investor. That's how they make their money, leveraging your money. And you pay that fee because, well, you didn't really have to do much work. Sourcing these deals would be massively difficult, especially if you don't already have connections into this space. And then vetting these deals, well, that would be quite the experience to learn how to do that effectively without losing tens of thousands of dollars. That being said, most of these deals are technically vetted. You need to do your own due diligence and have your own investment strategy. Most of my investment strategy surrounds around the product and the team. As a startup founder myself, that is something that I feel like I have an edge at. I feel like I can pick a good team and pick a good product. Now, there's a lot less information about these companies. Typically, you'll get an investor deck. Sometimes you'll get some financials, but it is nowhere near as public as some of these public companies like Tesla. You cannot see their balance sheets. You cannot see their P&L statements. You're not going to be able to do the financial analysis that you typically do on a startup, which is why they are more risky and why there's more upside. But you do need to do your due diligence, whatever that process may be, and you'll grow that process over time. Just make sure you don't place all of your bets on the first exciting thing that you see coming down the pipe. I've definitely seen some products come in that I'm like, wow, this is gonna be amazing. I wanna put all of my money here, but I can't. I set myself with a restriction, $1,000 per company for the first 10 companies until I understand that I know more of what I'm doing. Then we'll have the opportunity to double down later. The way a lot of these companies raise is they will raise on a regular cadence. For example, the company that just bought my most recent company, they have raised every year for the past 3 years. Now, all the information I'm about to tell you about this is public on Crunchbase, so there's no insider information here. Don't you worry about that. For the last 3 years, and over the last 3 years, they've 20x'd their valuation from approximately a valuation of around $75 million based on the Crunchbase data to now a recent $1.7 billion valuation led by an amazing investment firm, Tiger Global. Now, an investment firm like Tiger Global doesn't get in on the angel level. It's too risky for them. They can't put as much money to play. Tiger Global led a $200 million round in this company just now. And that's why the angel investing space is interesting for individuals like you and I. So from here, it's pretty easy to get started. If you are an accredited investor, head on over to AngelList, sign up, browse through the syndicates. You don't have to invest in deals that come across your again, desk. As a syndicate member, you can choose which ones to invest in, which ones not to invest in. I've been investing in probably about 20% of the deals that come across just because I'm not super excited about the other ones. And if you're not already an accredited investor, focus on net worth appreciation. You need to focus on getting that net worth up to $1 million. And honestly, I think real estate is one of the best ways to do that. I'll have some links down in the description to meet Kevin's course. It's how I got into real estate investing. It's how I managed to now have 2 rental properties that are increasing my net worth by $10,000 every single year. And that's it for this. If you enjoyed this or you think someone else you know would find this interesting, please share it, hit that like button, hit subscribe. And if you want to hear a little bit more about my raw thoughts on this, check out the podcast, link in the description. The Financial Illiterates, we just talked with Method Box about this and got pretty deep on it. And I'll see you guys next time. Peace.